that this is the game for the long term.
Mm-hmm.
And you can imagine that it's a very difficult business with, I would say, high entry barriers.
Mm-hmm.
So once you set up a hospital and it is profit making, then it's likelihood that it will keep on growing into the near future. They will gradually get pricing power as well. So it's a fantastic business from an investor's perspective.
Hey guys, welcome to the 23rd episode of the Indian Market Story. We're here with returning stock market expert Mr. Dipan Mehta. As you know, we're here to tell you the story of how India is going to get to $5,000 per capita GDP income. When I was born in 1995, we were at $500 per capita. Today, we're at $2,500 per capita. And soon, by 2030, we're going to hit $5,000 per capita GDP. As they always say, health is wealth. And that's why today we're here to talk to you about healthcare stocks. So, Deepan, please tell us, what exactly does the healthcare universe comprise of and why should investors care about healthcare stocks?
So I think I liked your opening statement where you said health is wealth. And I think if investors go for healthcare stocks, then certainly they will create wealth as well. Because healthcare is amongst the fastest growing industries within India. And because of rising disposable income and increased awareness of health, we are going to see average family spending more and more on medical procedures and on hospitalization, which is why I think these companies have got a long, long runway for growth.
Absolutely. And I think another thing that's really worth mentioning is with rising consumption, particularly of junk food, cigarettes, and luxury and leisure items, so to speak, or sin goods.
Sedentary lifestyle, yeah.
Yeah, a sedentary lifestyle is on the rise, and respiratory illnesses, diabetes, heart diseases, cancer, all of these long-term illnesses are also on the rise. So presumably that's another tailwind for healthcare stocks, right?
Absolutely, I think, and that coupled with increased availability of medical facilities and a large number of family doctors, which are a large number of medical professionals available, there's all the more likelihood that if there is any disease happening, then the average family would like to catch it very early in the stage as well. And on the whole, also, I think that because of increased awareness post COVID, especially, I think COVID was a defining moment. It was a healthcare crisis. So, post COVID, there has been so much of knowledge about how to take care of your health and what are the right steps you should take, what are the immediate medical procedures which are required if you have certain symptoms. All of this is galvanizing the average family to spend more and more on healthcare. So, I think across the board, whether it's hospitals, medicines, diagnostics, all of these are in a secular growth momentum.
Absolutely. I think today we're just going to focus on hospitals. We've done something previously on pharma, and I think our next one will probably be on diagnostics. So, for hospitals, what does the investable universe look like? And I guess what are the big names and how they perform from a stock perspective?
Yeah, see, I think that India, there are about 20 hospital companies, listed ones, which are large. And the largest, of course, is Apollo Hospitals. They were the first listed hospital company. And for many, many decades, I would say legendary investor Rakesh Junjanwala had a stake in Apollo Hospital, which was why it was quite fancied in the stock market. And clearly, I think over the last few decades, Apollo Hospital has created a lot of wealth for its shareholders. It was the first time we saw corporatization of the hospital industry as well. So from that point of view, it's been a great wealth creator. The second companies which came after that were Max Healthcare, Fortis Life, and we had Narayana Hrudayalaya. These are the large 4 or 5 hospitals, all of which have had a very decent track record.
Right. So the question that I'd like to ask is, you mentioned there's about 20 hospital chains that are listed, but we focus the investable universe on about 4 or 5. Why this differentiation? What's the deciding factor here?
I think, Varun, it is the size. And one thing is very clear in all businesses that if you have the size and the scale and you have the location diversity, then certainly that makes the business safer. And it also leads to stronger balance sheet. So you can invest in new hospitals as well. And mind you, hospitals are a capital intensive business. So it's important to have the right size of balance sheet so you can execute these projects. So we have selected these 4 or 5 companies based on size primarily and because of the quality of the balance sheets as well.
So, for an amateur investor, how would they go about analyzing a hospital stock? what are the key metrics or the key points to consider when looking at, I guess, these 4 or 5 companies?
First of all, I think Varun, analyzing a hospital stock is fairly easy. It's a nice, simple business. And some of the key metrics that investors look for is the number of hospital beds and how that is increasing based on brownfield or greenfield expansion. First point.
What's brownfield and greenfield?
Brownfield is existing hospital in one location. They keep on adding more floors or more sections, and that's how they increase the overall capacity or number of beds in a particular hospital. They may also add more units and more therapies over there, and that's how they get more revenues at the same location. It's the low-hanging fruit because already you have the patient flow. Greenfield is when you set up a new hospital, and obviously that is really tough to do because you have to get the doctors, the medical staff, and then you have to ensure that there is a patient inflow as well. So greenfield is a far more difficult proposition. But from an investor's perspective, a good hospital company should have a blend of brownfield and greenfield expansion. And the key metrics, two metrics to monitor over here. One is the number of beds, and second is the average revenue per bed. And listed companies in India are disclosing this thing every quarter, so it's available to you. So if you track that these two parameters, as long as they are growing, and management's forecast is that they'll continue to grow, I think then you're pretty much fine with owning a healthcare stock.
So a specific question here, is utilizations relevant here, or is that captured within the average revenue per bed?
No, you're right. Absolutely. Utilization also is quite relevant over here. And hospitals typically don't break even unless they have 50% plus kind of utilization. So utilization, I would say you can definitely add as the third major matrix to look at, apart from, of course, the financials of the company.
Right. So I presume the utilizations is why brownfield expansion is so much more lucrative than greenfield expansion.
Absolutely, and lower capital cost and quicker break even because, as I said, the patients are already over there. You're going there for cardiac, remediation. For cardiac surgery, then you can go for even oncology. Or some of the other medical fields as well. So once you have one hospital going and it is successful, its doctors are well known, and it has a track record and reputation, it attracts more and more patients. That encourages the management to have more and more therapies.
Right. So why don't we start with the biggest hospital chain, Apollo, and try and break it down and try and understand what makes them tick, what their relative size is, what their financials are, and at relevant points, we'll try and put the relevant financials up for our viewers. So could you maybe talk us through Apollo a little bit?
So Apollo Hospital was set up by Dr. Reddy, who himself was a renowned doctor. And it was his vision that healthcare should be there for the common man and it should be consistent.
Sorry, any relationship with Dr. Reddy of pharmaceuticals or
no relationship. But somehow both the Dr. Reddys have given and done human service for the healthcare sector. So Dr. Pratap Reddy, who was the founder of Apollo Hospital, was a visionary and a man ahead of his times. And at that point of time, he had this vision that there should be hospitals which are corporate in nature and they should offer excellent healthcare facility at reasonable cost to the large population, the middle class. And to a large extent, he and his daughters who run the company, they have fulfilled that particular ambition of theirs. So right now, Apollo Hospital has about 10,000 beds. The next competitor is half its size. And they have a cluster approach where they set up in an important hospital in a particular metro, and then they keep adding a network of hospitals around it. So they've got a Bangalore cluster, and they've got a cluster in East India as well as in North India. So that's their approach. And we can talk more about them, but by and large, they've been the most successful hospital company.
Absolutely. So I think we'll try and put up a historical view over the last 5 years of how their number of beds has gone up, as well as how their ARPU has gone up. But something that you mentioned is that as a hospital and a hospital chain grows older, their utilizations and their revenue becomes better. So is there anything specific in the financials that's been driving their stock performance or making them such a good pick for investors?
I think it's a very nice question because I want to just add that Apollo Hospital is a class apart. And the reason for that is that not only do they run a chain of hospitals, they run a chain of medical stores, they do diagnostics, but really something which investors are most enthused about is their digital offering. where they want to offer medical through a digital channel remotely. Now, they made investments in that particular subsidiary, and it's kind of work in progress. As of now, that particular subsidiary which offers healthcare digitally is not broken even, but the potential is enormous, as you can imagine, because the same doctor can therefore prescribe medicines or offer his advice to many more patients online than he can do on a physical basis. So that's something which they're experimenting with. And if it is successful, it will take Apollo Hospital to the next level, way ahead of its competition.
So, one thing that we discuss as a recurring nature in this podcast is that oftentimes for these high potential stocks, a lot of this future growth is priced in. Now, I don't particularly know about their P multiples or whether any of this is priced in, and maybe we'll try and have that up for our viewers. But what's your perception on where Apollo Hospitals is priced? Is it still something that investors can put their money into? Is it a wait and watch game? How would you approach it?
Apollo Hospital has always been an expensive stock, and yet it's been a multi-bagger. So I'm not going to get too phased by very high price to earnings multiple. I think so long as Apollo Hospitals and other hospital stocks keep on delivering on a positive basis year after year, 10-15% type of top line growth and bottom line growth, I'm happy to pay a higher price to earnings multiple. Because Varun, you have to understand that this is a game for the long term. And you can imagine that it's a very difficult business with, I would say, high entry barriers. So once you set up a hospital and it is profit making, then it's likelihood that it will keep on growing into the near future. They will gradually get pricing power as well. So it's a fantastic business from an investor's perspective.
Right. So very interesting. I think hopefully that gives our viewers an overview of how they should approach Apollo Hospitals. What's the number two player in the hospitals game?
Number two player again is a recent entrant, recent means last 10, 15, 20 years or so, and that's Narayana Hrudayalaya. Again set up by a renowned doctor, Dr. Devi Shetty. And again, these companies, they come into existence purely on account of the entrepreneurial drive and the vision of the promoter that they want to do something for the society and the community. And that was the mission statement of Dr. Devi Shetty as well. And Narayana Hrudayalaya has a very interesting business model. It is a low capital intensive business model where instead of trying to build all the hospitals, and they have built a few of them, they want to try and also acquire hospitals on lease or rental and then spend money to upgrade them and offer good quality healthcare services through those acquired or leased hospitals, thereby keeping their capital costs low. And therefore, Narayan has the highest return on equity.
Oh, very interesting. So, just one clarification. When you say they're leasing hospitals, are they leasing space and turning them into hospitals, or are they leasing existing hospitals and upgrading them?
The latter. Existing hospitals, upgrading them, giving them their management systems, attracting the talent over there, and giving the brands to attract the patient flow.
I guess to try and put it into perspective in comparison to Apollo Hospitals, Apollo Hospitals sits at about 10,000 beds and, solid ARPU. How is Narayana Hrudayalaya placed? And how many beds, ARPUs? What's their operational metrics, I guess?
About 5,500 beds or so. Their ARPUs or APROBs, as we call them, would be more or less in line with the industry.
Sorry, APROBs?
Average revenue per occupied bed. I think if I got the acronym right. So its ARPU is more for telecom stocks. This is another matrix, but more or less in line with the industry standards. And they also have a very highly profitable hospital in the Caribbean. Can you imagine?
Oh wow, that's very interesting.
Narayana Hrudayalaya, yes, and that's a decent contributor to the profits. But by and large, I think their focus has been to acquire hospitals which are not doing that well and offer their management systems and have a share of the profits and the revenues and grow the business gradually. They have been fairly steady in terms of adding new hospital beds. And I think Dr. Devi Shetty's reputation certainly is a big, I would say, positive for that stock.
That's very interesting. I think a capital light business model is an interesting way to improve returns, and certainly a stock to watch. So hopefully we're also able to show at this point in time the price earning and the stock performance. But I think you mentioned that Apollo always has a premium. Does this apply to Narayana Hrudayalaya as well?
No, I think that Apollo is a class apart. As I said, because of its digital initiatives, because of its chain of medical stores, which sometimes when the entire sector is a bit low, then these kind of medical chain stores, they certainly add to the revenue of the company, and it's a complete offering as far as medical systems is concerned, unlike the other hospital companies.
So Narayana Hrudayalaya is better priced.
Yes, certainly cheaper than Apollo hospitals, but I think growth rates are now pretty much in sync.
I see. So we've discussed, I guess, the number one and number two player in this space. Why don't we go to a different player, somebody that's maybe held well by retail investors, but is maybe not doing so well, or another player in this space?
So the next two companies which come to mind, and mind you, we are talking about companies based on the number of beds, but the revenues and profits ranking may differ. So the other two companies which are north-based companies are Max Healthcare and Fortis Healthcare. Fortis Healthcare is in a bit of a controversy because it was founded by the Ranbaxy brothers, and they got into a controversy.
Pharma Ranbaxy
Yes.
brothers? Okay.
They got into a controversy with Daiichi, who they sold the Ranbaxy company to, and there have been a lot of litigation on the shareholding pattern of Fortis Healthcare. But to cut the story short, there are certain issues with the ownership pattern of Fortis Healthcare. But once the Supreme Court judgment comes in favor, then all those controversies should get solved.
When should we expect that judgment? Any timeline?
Anybody's guess. But I think the company is now pretty well managed. It's a kind of a turnaround story. And one of the most important, again, I would highlight here, is that Rekha Jhunjhunwala, wife of late Rakesh Jhunjhunwala, owns 4.5% stake in Fortis Healthcare. And when you come back to Apollo Hospital, that was amongst the first large investments made by Rakesh Jhunjhunwala himself. So, there's something about hospitals and Rakesh Jhunjhunwala. He likes the particular story, and that certainly keeps all of us who follow him pretty much interested.
A very interesting story. So we'll try and very rapidly flash up, Fortis's beds and what was the acronym again?
APROVs.
APROVs, the revenue per occupied bed, so people get a sense of the operational metrics. Do we want to maybe talk for a minute about the pricing of Fortis Healthcare, whether it's favorable, unfavorable?
Well, I think all these four companies are in the price range of 50 times price to earnings multiple or thereabouts. But that's the going premium for these hospital stocks. Max Healthcare, another well-managed hospital company as well from the Max Group, which are the brothers of Ranbaxy, cousins.
So wait, let me try and understand this thing. So the Ranbaxy brothers had a pharma company, and they had a hospital company, and their cousins had another hospital company.
That's right.
Wow. What an enterprising family.
Absolutely. So Max Healthcare also has done pretty well in the last few quarters or so. And I think that if you ask me in a simple way to describe all these hospital stocks, I think they've hit a purple patch, especially post-COVID. There's a good deal of momentum behind these companies, especially medical procedures, which are not absolutely necessary, like they're not life and death kind of operations, but these are operations people take to improve their lifestyle and preventive medical procedures. So all of this is, driving hospital revenues, and these companies are poised to do really well because of secular spending taking place in the healthcare side.
Any thoughts on what the future of healthcare stocks looks like? Do you think this purple patch will continue going forward, or any speed bumps along the way?
No, I think that this is a really long-term story. And if you own healthcare stocks, hospital stocks for 3, 5, 10 years or so, they'll be great value creators. You can imagine the population of India, the way urbanization is taking place. There's going to be a huge demand for healthcare and medical procedures. Only risk factor is government interference, because sometimes the government wants to decide on the price of an operation or medical procedure, and that may curtail the margins to some extent. Another risk factor is insurance companies trying to curtail how much they will pay out for a medical procedure. So, but these are like part and parcel of every business. But again, coming as more and more health insurance is being provided, more and more awareness, I think a lot of these healthcare stocks have a very, very bright future.
Okay. So any closing thoughts on the healthcare sector or hospital stocks in general?
One very important thing to keep in mind when you invest in hospital stocks is to be patient. There are few quarters which are soft because of seasonal regions, because of new hospitals getting launched. For whatever, sometimes there's some disruption here or there. But by and large, if you sit through the bad times also of hospital companies, a good quarter generally does come around the corner.
All right. Well, I think on that note, we'll maybe close the podcast and leave investors some interesting thoughts to think about their portfolio and how to invest in hospital stocks. Thank you.
This podcast is produced by Elixir Equities Private Limited, a SEBI-registered research analyst. Registration number INA00004787. The information provided in this podcast is for educational and informational purposes only and should not be considered as investment advice. Investment in securities market are subject to market risk. We strongly advise all investors to read all related documents carefully before investing.